Welcome everyone. I am so excited to have you here today for this special session on year-end tax saving strategies. Let's face it, none of us enjoy paying more taxes than we have to. The good news is that we have strategies that we'll discuss today that can help you keep more of your hard-earned money in your pocket. So by the end of today's video, you'll know exactly what you need to do to take control of your taxes before the end of the year. So whether you're a business owner, a contractor, or just someone who wants to maximize their personal tax savings, you're in the right place. Let's dive in and make sure that you're not leaving any money on the table this year. First, let's talk about getting your financial foundation in place. If you've had startup expenses but no revenue this year, don't let those expenses go to waste. You can actually deduct startup costs, and this can significantly lower your taxable income. Also, accurate bookkeeping is your best friend when it comes to tax planning. If your records aren't up to date, you could be missing valuable deductions. And let's make sure everything is in order so that we can maximize your tax savings. Now, for those of you with LLCs and income of 40 to 50,000 or more, one of the things to consider is a retroactive S election that you can do with your LLC. So by electing an S-Corp status, you can save big on employment taxes possibly. This is a move that could put literally thousands in your pocket. Let's dive into payroll and retirement. If you own an S corporation, getting the right payroll strategy in your business is critical. And why? Because every dollar that you pay in wages versus taking a distribution is costing you 15 cents. So paying yourself a reasonable salary will help you reduce your self-employment taxes. And speaking of financial stability, are you maximizing your retirement contributions? By contributing to a solo 401k or possibly a SEP IRA before the end of the year, you reduce your taxable income possibly and build a solid foundation for your retirement. It's really a win-win. And here's a lesser known strategy. If you're married, paying your spouse out of your S-Corp is another way to reduce your taxable income while contributing to their retirement. It's all about creating multiple opportunities to save. Next up, let's talk about health savings. If you have a high deductible health plan, contributing to an HSA or health savings account is a no-brainer. It allows you to pay for medical expenses with tax-free money, and the contributions themselves are tax deductible. That's double the savings. And if you have an FSA, it's actually crucial to make sure that you use those funds before the end of the year, because if you don't, they're gone. Now, HSA is not use it or lose it. So that's the difference between an FSA and an HSA. But check your balances and then spend based on what those are or based on your needs. Lastly, if you're a business owner, setting up a health reimbursement arrangement or HRA lets you possibly reimburse yourself for medical expenses tax-free if you have medical expenses that are not paid for by your health insurance or your HSA. It's another powerful tool to really lower your taxable income by taking those deductions out of your out-of-pocket medical expenses. Here's one of my favorite strategies, and that's paying your family members. If you have children under 18, you can pay them for legitimate work in your business. It's tax-free income for them, and you get to deduct it. This is a fantastic way to shift income from a higher tax bracket, your tax bracket, to a lower tax bracket, which in a lot of cases is zero. So what you can also do is teach your kids to start saving money by contributing that money that they earn to a Roth. This helps them start building wealth, and it grows tax-free. And don't forget about grandchildren, nieces, or nephews. If they're working in your business, you can pay them too and get a deduction. And also think about if you're paying to help support your parents. This is another way to get them involved in the business and be able to shift some of that income that you've earned to them for money that you're already paying. So let's talk again about retirement. If you haven't, consider converting some of your traditional IRA funds to a Roth. Yes, you'll pay taxes now, but the money will grow tax-free, and when you retire, you won't have to worry about paying any taxes on those withdrawals, which would be at ordinary income tax rates. Also, make sure you maxed out your solo 401k or SEP IRA contributions if you so choose. These contributions help reduce your taxable income in some cases, and they're a great way to set yourself up for retirement. And if you're charitably inclined, don't forget that donating appreciated stock or assets can help you avoid capital gains possibly on those appreciated assets. You'll get a deduction for the full market value of that asset, and it's a great way to give back and savings on taxes as well. Just like most things in life, timing can make a big difference when it comes to your taxes. If you expect your income to be lower next year, it might make sense to defer income to the following year. On the flip side, if you think that you'll be in a higher tax bracket next year, you might want to accelerate expenses before year end to reduce your taxable income down. This is where we can get strategic. By making small adjustments in how you manage income and expenses, you can significantly impact your tax bill. So for example, you could actually, in some cases, depending on how your entity is set up, prepay and deduct expenses in the current year, and then you don't have to pay for them in the future year. Rent is a good example. So thinking about making a big purchase, if you need a new vehicle or equipment for your business, now really is the time to act. Buying before the end of the year allows you to take advantage of what's called Section 179 or bonus depreciation, which is just fancy for a way to be able to deduct that cost immediately. This is an excellent way to invest in your business and lower your taxable income at the same time. So let's make sure that you're staying compliant with tax deposits. Have you made all the necessary IRS and state tax deposits this year? Catching up on them could help you avoid any possible future penalties and interests. Also, are you ready to issue 1099s to any contractors you paid more than $600? It's important to have everything prepared for January to avoid any last minute scrambling. And if you have any capital losses, don't forget to use them to possibly offset capital gains. This is especially important for those of you with investment portfolios. Let's say that you're taking advantage of those losses to help reduce your taxable income by possibly selling capital assets that have appreciated and selling capital assets that have lost. Therefore, you offset any capital gains with capital losses. For those of you that are planning for future education expenses, contributing to a 529 plan may be a great opportunity. In some states, it may actually be deductible. It could be a win-win for your family and also your taxes. Also, if you have any highly appreciated assets and you're hesitant to sell because of the tax hit, maybe considering a charitable remainder trust might be a great opportunity. This allows you to sell the asset, avoid the capital gains, and generate an income for yourself while receiving a charitable deduction. So we've covered a lot today, and I hope you're feeling a little bit confident about some of the steps that you can take to maximize your tax saving. But as we talked about, here's the thing, time is actually running out. You need to make sure we implement these strategies before the end of the year. And to help you with that, I put down in the description a link where you can get a copy of a checklist that'll help you with planning before the end of the year on some of the strategies that we talked about today. And also, I encourage you to schedule a follow-up consultation with me if you'd like to go through some of these strategies, because every client situation is different, and I want to make sure that we're customizing a strategy that works best for you. That's it. That's all I got for you. I really appreciate your time today, and if you could hit that thumbs up, that would be awesome. Okay, thank you.